Hey friends, I really love it when my favorite dividend stocks, high quality dividend stocks, go on sale. Because when the stock prices trend down, the starting dividend yield trends up. In other words, the money that I invest gets more immediate dividend cash flow than before because the stock has gone down in price. So I want to share a stock in the video today, but this stock is characteristic of an entire industry. Not many people are talking about these stocks yet, but they are starting to go on sale. What is so exciting to me about these stocks also is many people, they just don't like this industry. They kind of look down on this industry, and that makes me like this industry even more. You know me if you've been following my channel for a while. Anyway, I want to talk about energy companies today. Big oil. I love big oil, and I want to discuss Chevron in particular because Chevron is starting to trend down in share price, which makes it really enticing for this dividend investor. And so as you can see on the screen in front of you right now, just a few quick statistics. So you may not even know this. I didn't know this. I wasn't actively watching this sector too closely, but thankfully some of my patrons and some of my community members just reached out and said, hey, Ian, take a look at the energy sector. Take a look at big oil right now. So I already own Chevron, but I really haven't been looking at it actively. But as you can see, it's down almost 19% from its 52-week high. When I look at the earnings estimates from analysts, the forward price earnings ratio this year is a 13.42. Next year is a 11.49. Now here's where it gets exciting. Many of you remember my aggregate portfolio yield for my portfolio stands at about 3.76% from my last portfolio update, which I will link to in the pinned comment below. It's actually probably quite a bit lower than that now because the stock market has been surging. The stocks overall that I follow, that I own, have been trading at more expensive levels. That's what makes it so enticing to look at a stock like Chevron today because I'm searching for value. But if you remember, my portfolio aggregate yield, it stands at about 3.76%. I want to increase that yield strategically because I'm using dividends right now. Right now I'm using them. I like Chevron because as you can see on the screen, it will lift my aggregate yield because it's yielding a higher percentage yield than my portfolio overall. Chevron has a starting dividend yield right now of 4.68%. That is music to my ears. That is a great starting yield. Now, the payout ratio is 63%, so there's still room to increase the dividend, but that's a higher payout ratio. They have been increasing the dividend on average per year by 6.49% over the last 5 years. That's an impressive dividend compound annual growth rate, but given the payout ratio at 63%, I'm not sure if they can keep it up at 6.49% per year on average, but if they can, that really makes that starting yield even more impressive. Because not only do they offer a high starting yield, but that dividend is growing. So my yield on cost can go even higher than that over time. I probably will add some of this Chevron stock to my existing position over the course of the coming weeks. The market cap is $252 billion. First and foremost, I just want to highlight the power of this community. Thank you especially to my folks over on Patreon. I'm going to link to my Patreon in the pinned comment below. Check it out. It's really awesome. It's my premium community where I offer bonus content. There's 2 tiers over there, but my patrons have been so kind, multiple of them, to reach out and say, hey, Ian, really take a look at big oil. Take a look at energy. I think you haven't really been looking at it. You ought to be. And boy, were they right. I haven't been looking at this sector. Why? Because it only comprises a fraction of my portfolio. It's a smaller percentage of the portfolio. I would like for it to get a lot bigger, but I just haven't been looking at it. So I'm excited to cover Chevron a little bit today. By the way, everyone, it's late at night here. I'm really tired, and so hopefully this video will come across well. I was at Las Vegas last week. I had an amazing time. I was there for business and then also with my wife and kids for the weekend for fun. We saw the Cirque du Soleil Michael Jackson 1 show. It was amazing. We enjoyed time staying at the world famous Bellagio, which is partially owned actually by a REIT that I own, Realty Income. And so it was great to check in on my investment there. I'll link to that YouTube video, the short that I did in the pinned comment below. I did a little video there live from the Bellagio. But coming back from that week, this week I've been catching up on a lot of work and a lot of late nights. And so anyway, everyone, bear with me, but boy, did I have a nice time there in Las Vegas. Also, by the way, I caught up with my friend Ryan. Check it out, Ryne Williams. I will link to his YouTube in my pinned comment below. He is one of my earlier subscribers, started following me from the early days when I was doing the in-person meetups there in Northern California. I did one back in the day in Dixon. I'm going to try to search for that video actually and link to it in the pinned comment below. But shout out to all the old school subscribers. And it was so much fun meeting up with Ryan because he has a powerful YouTube channel of his own that is growing really quickly. And I'm so excited for everything he's doing. So let's continue with the video. I have a lot of ground to cover here. Check it out on the screen right now. So I just want to go through everything on the screen. I jotted this down before the video. Here are my thoughts on Chevron and big oil in general. I like to buy stocks that I already own when they're down in share price. I've done this quite a bit over the years and it has worked out for me. One of the more recent examples I actually mentioned is Realty Income. I was buying that when it was down. That REIT has now recovered. Some of you might also have seen in recent months, I bought a lot of Altria and British American, and both of those have done really well. Those videos aged well. And so I like to buy stocks that I already own when they're down in price, when I see value, when I believe I'm buying value and other people just don't see it. Now, it's difficult to analyze oil stocks. The price of oil can be volatile. It's actually trending down. I'm going to talk about that in the video today. It's hard to analyze the oil stocks and the statements of cash flows because capital expenditures can be large and volatile. And honestly, I'm just not an oil industry expert. Because of all of this, when I buy oil stocks, and I've done videos on this over the years, I like to stick with the best quality. I believe Chevron is probably the best quality oil stock super major there is out there. I like to buy when prices are down, preferably way down during a crisis. Look, I don't see a crisis right now. Oil is not facing a crisis. This stock is down from its 52-week high. I'm seeing some level of reasonable value there as compared to many of the options out there. This is a stock that serves a purpose for me. It will increase the portfolio average dividend yield, but I'm not going to fool myself. There's no crisis now, and if there were a crisis, this stock could probably get cut in half in terms of share price, or at least go down maybe another, say, 40%, and I have to be prepared for that. In the past, I've always done well with oil when I buy it during some kind of oil crisis. And a perfect example, actually, as you can see on the screen, I have a lot of text on the screen here, so hopefully it's legible, but I bought some BP during the pandemic. Back in 2020, I bought it at $16.70. So I don't want to go too heavy in oil here, but I'm happy to add some Chevron because I don't see too many other alternatives out there that are offering the kind of value, the reasonable value I see there, and that 4.68% dividend yield definitely is meaningful to me. So let's just talk about oil right now. 2023 was a record year for big oil, for oil super majors. At Chevron, during 2023, they returned $26.3 billion to shareholders. Let me repeat that, $26.3 billion. Now, $11.3 billion of that was in dividends, $14.9 billion was in share repurchases. So far, 2024, it's just not trending quite as well. Why is that? Why is 2024 not trending as well as 2023? Well, it's quite simple. In my opinion, right now, we've seen this year so far, the price of oil is trending down a little bit. And when the price of oil trends down, oil companies, super majors, tend to earn a little bit less money. They are tied somewhat to the price of oil, to the commodity that they sell. You can just check out this chart in front of you right now that compares Chevron versus the price of oil. And check it out. More or less over the last year, hey, crude oil's down 23% and Chevron there is down about the same. It's down 22.95% over the course of the last year. Now, these numbers are a little bit different than what I pulled from Yahoo Finance, but more or less, this is Google Finance. It's showing the trends. And so with that, I want to go back to my notes. I've got a few more notes to share. As you can see on the screen in front of you right now, what else is going on with Chevron and with oil in general? Here's a big one. In my portfolio, and I'm going to link to this in the pinned comment, I recently did a portfolio update. Energy is only 2.8% of the value of my portfolio, 3.5% of the value by dividend cash flow. I could stand to add significantly more over time. Here's perhaps my favorite point from this entire slide. There are so many people out there in this world that would love to see big oil super majors go away completely. They don't like it. They have a bias against it. They don't like the industry, even though all of us rely on energy for our day-to-day needs. For some reason, there's a lot of just negativity against this segment. I love it when there's a segment of stocks that has just a pervasive negativity against it. Another example are the sin stocks like Altria and British American, where I have done phenomenally well in those over the long term and over the last year. And when I've seen this, when I've seen a segment of stocks just have a lot of negativity about it, generally those types of stocks will trade oftentimes at value levels just in perpetuity. And I've seen this with oil. Oil sector oftentimes has been accompanied with lower PE ratios. We know that PE ratios generally are sector specific. With sectors like sin stocks and oil, they tend to be lower. With other sectors like maybe technology, they tend to be a bit higher. The reason sin stocks and oil stocks have lower PEs in general are honestly a function of the industries that they're in. Maybe there's not as much promise going forward as technology, but also there's many investors that just flat out refuse to buy them. There's many investors that try to be kind of in their mind, and I'm not putting this down, but in their mind, they believe it's socially responsible not to buy these stocks. And hey, every investor needs to make their own decisions. Anyway, by doing that though, it creates this ongoing value. So I like that out of the gate with stocks like Chevron and with stocks like Altria and British American. But what gets good here is, in addition just to kind of trading at a reasonable level already, Chevron has been falling in share price further because the price of oil is down. And that has created a little bit of value, if you will, in my mind. Surely, as I said, it's not a crisis. It's not deep discount. It's not like when I bought BP back in the day in the pandemic, but it works for me, for my portfolio, for my specific situation right now, just to add a little bit to a sector that's already small, underweighted in my portfolio. And so as you can see on the screen in front of you right now, I have a few more points to share. One that I want to share actually is, look at these statistics. This is from the investor deck, from the annual report from Chevron. They are producing 3.1 million barrels net oil equivalent daily production. And so they're doing 2.7 million barrels per day of refined product sales. Does that to you look like an industry that is just going under? There are a lot of people out there, and this is one of the most important things I can convey in the video today, that don't like a sector. And because they don't like it, they almost want to will it out of existence. But just because there is a subsegment of people out there that would want to believe that oil is going away. Do the statistics I just shared look like an industry that is going away anytime soon? No. All of us out there depend on reliable energy. And thankfully, companies like Chevron over time are working very hard to reduce their carbon footprint and to be more effective, more efficient in the ways in which they generate energy for all of us. And so anyway, as you can see, more to cover. I want to go through just a few more things. Why Chevron? Why Chevron, for example, versus BP, another company that I own? Well, the reason for Chevron is when I look back at the pandemic, it had the lowest drawdown of all the oil stocks I follow. To me, that is indicative of a high quality company. That is indicative of a company that is best of class in the energy sector. And so that was a data point that just when I was looking, well, oil's starting to go on sale a little bit. Which one do I want to buy? That's why Chevron. Another thing about Chevron is during the pandemic, they did not cut or reduce the dividend, despite some competitors, which I own, doing so. In fact, they have 36 consecutive years of higher dividends, which is amazing. They're a dividend aristocrat. And so they are very, very mindful and focused on the dividend. Of course, the starting dividend yield, as I mentioned, of 4.68% is quite enticing. As compared especially to my portfolio average, the dividend compound annual growth rate is very strong. I'm not sure it can continue at that given the payout ratio. Overall, I believe that Chevron is one of the stronger oil stocks around. And in fact, I want to share just a few statistics from their annual report. As you can see on the screen in front of you right now, check this out. They have 11.1 billion barrels net oil equivalent proven reserves. They have 261.6 billion total assets, quite a bit more than liabilities, which is great. They have a good, strong shareholders' equity there. They have 63.7 million acres of land that is leased for oil and gas exploration and production, 196.9 billion sales and other operating revenues. And so I'm not going to do a deep dive today into the financial statements behind Chevron. I did look at them before the video today, but like I said, I'm a little bit tired. This has been a long week, but I did want to get the video out there to all of you. I hope that you enjoyed the video today, even though I'm not on my A game in terms of video production as I usually am. And let me know in the comments below, everyone, what you think of Chevron and the other oil companies out there. Are these hidden gems right now? Are others ignoring this opportunity? Could the opportunity increase from here? I sure hope it does, because everything else is so expensive right now. Put in the comments below what you think. And if you did enjoy the video, please go ahead and click the like button. It means the world to me. Before I go today, in terms of a full disclosure, I own the stocks mentioned today. I am long Chevron, ticker CVX, BP, ticker BP. I'm long Altria, ticker MO, British American, ticker BTI. I'm long Realty Income, ticker O. Before I go, in terms of a friendly disclaimer, today's video, it's not investment advice. I'm not a licensed investment advisor. I'm just sharing my journey here on YouTube for fun and entertainment. Before you go out and invest in the stock market or anywhere else, please consult your own licensed investment advisor first. I'm just sharing my personal journey for fun and entertainment. It's possible to lose money in the stock market. I love you all. Thank you so much for watching the video today. I'll see you in the comments below, and I'll see you in the next dividend stock investing video.